Relax Treeland. And joining me today is someone I've met recently. Her name is Katy Mackenzie, and she's with the Mortgage Group. And she is doing a dynamite job of educating her clients on how to position well in the mortgage world in our crazy, spring market on the heels of COVID and all the other nonsense that's been going on with the real estate world. And in my 14-year career, and everyone else I'm talking to, this is the most nuts we've seen ever. And so I thought it would be really sort of great to have you on and share a little bit of your expertise and your knowledge. And quickly, I just want everyone to know, go check Katy out, especially on Instagram. She drops these epic little reels with like all these educational bombs that are so much fun. We'll add her details in the link somewhere. Okay, Katy, hi. Why don't you tell us a little bit about yourself and how long you've been in the biz?
Yeah, thank you. So I've been lending for 21 and a half years, which
Wow.
sounds outrageous.
It does, given you look
Basically,
14.
I came straight out of university and started with Scotiabank. So I started with Scotia in 1999 and dove right into the lending side. So I learned firsthand all the weird, wild, wacky, messy files in an exception lending department. And then I stayed with Scotia for 15 and a half years, but sort of saw a lot of the writing on the wall as it related to tightening lending rules and, sort of a cross-sell piece. And I just wanted to do pure mortgages and have more than one product to offer. So I quit my full-time permanent 10-year job working here in Yaletown. I actually opened the Yaletown branch and quit my job. Everyone thought I was nuts. And began to work for myself almost 6 years ago, and it's been awesome. I only wish I had done it a decade before that. I learned a lot and was educated a lot through my experience at Scotia, but I love the broker side in having full independent objective advice. So I'm not an employee of a specific bank. So when I offer a recommendation to go to Scotia, it's because it's the best product offering, all things considered, including rate, of course, but all things considered for the clients. So yeah, so I've been on the broker side for now almost 6 years, and it's definitely been a wild ride in the last year, and most specifically the last few months. It has been wild, absolutely wild. So your conversation with me today is wildly important for buyers.
Right. Okay. So let's dive right in, because one of the things you and I've talked about is, we've seen all these stories out there. I've been writing, you've had these files come across your desk, and I kind of wanted to discuss, what can a buyer do today, given our market, to position themselves well, and what are some red flags, what should we be worried about, and maybe just share some of the things that you're seeing out there.
Mm-hmm. So first and foremost, my recommendation is to get a pre-approval. Even if you have good income, good credit, you can afford it. Well, what if the income numbers that you're using are incorrect, or there's something sneaky on your credit bureau you didn't know about, or the lending rules have changed significantly since the last time you took out a mortgage, such that you don't actually qualify today. You want to make sure that you've been vetted by an industry professional. And I'll speak to that a bit.
In other words, somebody's gone and actually looked at your numbers, crunched everything. It's not just, sure, we'll give you a mortgage. It's actually, we know exactly what you qualify for.
Exactly. So call it what you want: pre-approval, pre-qualification. Like, there's a number of different names for it, but here's what needs to be done. You must have submitted your personal information via some sort of application: name, address, employment information. Number two is you need to have submitted your documents to that same person processing the application to make sure that the numbers that you've given them are the numbers that that lender is going to be using. Self-employed people are paramount for this. So when you ask them how much they make, they give you their gross revenue. But what if there's write-offs, right? So we all have write-offs.
Like that gross number more.
Yeah, the gross number is always more. So you want to make sure we're using the right number. So whomever you're working with, broker or bank, have they asked for your documents? If they haven't, you're not ready to make an offer. They must have also pulled your credit, because sometimes there's sneaky things that pop up on there. A really good example is I had a client with an ambulance bill. Didn't know he had to pay for a ride in an ambulance. Yes, it's not covered. He moved. They don't send you your bill for about 3 months to make sure that you're out of hospital. And he didn't have the bill, didn't know he had a bill. It went to collections, showed up on his credit bureau when we went to do a mortgage application. So you might think everything's okay, but you want to double check. Right. Or you're using your bank's online mobile system that shows you what your credit rating is. We do not use that same credit reporting system. So if you're, say, in credit repair or repairing something from a past life where there's been a hiccup, the credit bureau that you're looking at is not what we use. So you want to make sure that your credit is good.
Okay.
And then you want a rate hold in place. So when there are changes in interest rates, it's not going to affect your buying behavior. You're going to keep to your actual real estate purchasing strategy as a result of having a rate hold in place. So forget what the jargon is. Are those pieces in place? Do you have an app? Have they collected your documents? Have they pulled your credit bureau to give you an accurate amount to purchase with? Because if you have not done that and your realtor does not know if you've done that, they cannot negotiate from a strong position. Like if you know that client is fully vetted, 100% ready to go, then we only have to figure out the property piece. Exactly. So a red flag is someone saying, oh yeah, they said I was kind of okay for about, okay, stop. What is your maximum purchase price? Absolutely. We make some assumptions as to the property strata fees, taxes, and those things. But, within a really close range, here's what you can shop with. Right. So that's the most important piece, I would say, in this market, because with the high demand and low supply, we're seeing a lot of activity and a lot of people being recommended to go subject free.
And of course, that's where we were going. And so what is your advice? I mean, we kind of know what you're going to say, but help us break this down.
Okay. So it's an unpopular opinion, but Katy Mackenzie, would never go subject free. And again, 20 some odd year mortgage professional, I personally would not go subject free, even if you have been fully vetted. So you have done that full pre-approval process that we just talked about. Yes. The lender has not reviewed the property. Which means so there's two pieces to it. Yeah. So they will not review that property either until you have an accepted offer. So I'm going to say, no, you cannot. We can get you 99% of the way there, but if something wiggles its way out in those property documents, or something we may have missed in the income documents even, right. You can have the lender decline the financing, and then you're bound to this legal document.
Well, so here is another question that's been coming up for me lately is, as prices we were setting new benchmarks week over week, right? Just, in every regard. And you start to get to the point where you wonder, wow, is this, if this needed to be, what's the word? I'm losing my mind. Appraised. Is this going to even appraise out? Right. And yes. At what point is the price now over what a lender is willing to supply? So how does that work out in the wash? Should something like that actually happen?
So that's another red flag. So even if you're pre-approved, we're lending off of the lesser of your purchase price or the appraised value. So if someone's coming to you and you're saying, this is really priced at, say, 1.2 million, but to get it, we're probably going to have to offer 1.3.
Right.
Now we're only lending off of 1.2. So you're going to have to come up with that additional down payment.
As cash.
Correct.
Yeah. So it's right. It's not like I can get another line of credit or some other kind of loan to cover that, correct?
Yeah. Now, in certain circumstances, let's say it's a rental or a secondary home for somebody, they may have a secured line of credit against another property that we may already be including into the calculations. So right. We may be able to draw from there. If it's a line of credit we haven't introduced, then we need to include that repayment on that line of credit into the debt servicing, which may cause you to not be approved for the amount you're looking for.
Yeah.
Another broker in our industry did a video on this too. He said, there's never been a better time to dump a property that has a problem, because with a subject-free offer, even if you do an inspection afterwards, if there's an issue that comes up, you're legally bound to buy that property. And if the lender says no, then, you know, we can go to multiple lenders,
right,
and pray that someone's going to give us the opportunity, but they might do it, but they may ask for, say, additional down payment,
right.
or, you know, a multitude of other things they may come forward with and ask for.
So yeah, so it is complicated. And of course, we are not advising that anybody dump any unsavory properties at the moment. So it's really interesting. So have you seen any subject-free offers on your desk, or like?
Oh yeah.
Yeah.
Oh yeah.
Yeah.
So my role is to just best educate the clients. And as you've spoken to, that's a big piece for me, is the education. And I work from a worst case scenario perspective. So I'll just let you know what the risks are, and then say, you know, what could we do in each of these scenarios if they occurred? And what's your backup plan if they do occur?
Yes.
And if we don't have a backup plan, are you comfortable with that level of risk?
Fantastic.
So
absolutely.
Knock on wood, you know, we've gotten everybody across the finish line. But in some circumstances, there has been that ask for an additional down payment.
Right.
And that's the worst, you know, I've had through my desk in the last few months.
Yeah.
But
and
as you're
sorry, just to interrupt, I was just going to say, I feel like it is getting better. Like, I'm starting to see some ease on the market a little bit, more and more inventory hitting every day. That spring market's definitely kicking in. I think with more, you know, inventory, that gives everyone just a little more breathing room, and you can write those subjects and not feel like you're missing out. So I think that's really important. It's a positive sign. All right. Did you have something else to add to that?
Nope.
Okay. Let's talk quickly also about, you'd mentioned before that those rates are starting to creep up a little bit. Do you want to give everyone an idea about, you know, what's the perspective there? Like, what does that mean? And should they be locking in immediately, or what should they be doing?
Well, it's all dependent on where they're at, what they're doing, what the property purpose or use is. So fixed rates have come up in the last few weeks, and significantly to where they have been. So we've seen some lenders move up 0.3%. Now that might sound really, really small if you haven't been listening to what mortgage rates have done, but we've had rates below 2% on the fixed rate side, and now they've come up just above 2%. Now rates will vary based on your individual application, credit rating, the use of the property, your amortization period. But that's a significant jump to where they've been. And we've only seen rates decrease for a very long period of time. So a rate hold through a pre-approval can give you the comfort level of knowing that you can shop without that price point increasing, and then your actual cash flow changing as to the price point that you're looking to shop at. So a pre-approval is good for those rate holds on the fixed side.
Right.
Now, in opposition to that, what people may be saying is, but we've heard the government saying they're not going to raise rates until 2023. So why are fixed rates going up?
Yes, great question.
The simplest way to describe this is, if the bank has money to put somewhere, say they have $600,000 and they need to put it somewhere, invest it. If they put it into a bond in the market, risk-free, and it earns 2%, well, they're going to charge you a little bit more than 2%. They're going to charge you, say, 2.25% for that money. So if the bond yields start to rise, that's why fixed rates start to rise.
Right.
When the government's speaking about keeping interest rates low, they're generally speaking to the Bank of Canada adjusting what's called the overnight rate or benchmark rate, which is still low. Last meeting, Bank of Canada, last few meetings actually, they have not changed this rate. So that relates to variable rate mortgages.
And some people are a little nervous about, variable rates. They're worried about, a sudden jump or spike. And like, what do you tell people about choosing a variable over a fixed?
Yeah, well, it does have pros and cons. So the benefit is right now, the spread between a fixed and a variable rate is quite wide. And in fact, the effective variable rates have decreased as fixed rates have come up. So the benefit of a variable is right now you can get in at, say, I mean, I don't want to quote a rate, but you can get in still well below you can get in at like 1.5.
Right.
I'll say,
I'm remembering my mom paying 18%
yeah,
on her
yeah,
mortgage, that was back.
yeah.
Yeah.
But that's, I mean, when she went into it, it was probably, 18 and then it rose to 21, right? So it's only going to move within a few points, let's say, during a term of your mortgage. Again, when you do the pre-approval, we're qualifying you based on a higher rate anyhow to make sure that when that mortgage comes due, you've paid it down, your income will likely have risen, so that's still going to be affordable at renewal. So although we love to hate this stress test rate and qualifying rate, it also does help you long term in the event that rates do rise.
100% agree. 100% agree. That's so important too, because that stress test did, I think, stress everybody out.
Yeah.
Now it takes more to qualify for less, kind of thing.
Yeah.
But it does support you should things shift around a little bit and you've got some wiggle room.
Yeah. Yeah. So the benefit of the variable mostly is that if you were to pay it out, the interest penalty is only every 3 months. So it's significantly less than a larger interest rate differential penalty, which people, I'm just talking to a client, it's $28,000 to break their term right now.
Ouch.
So, and on 3 months interest, it would be 1,800. So it's significantly different.
Yeah.
And you can always early renew out of a variable into a fixed during the term. So if rates start to rise, you can lock into a fixed rate term at that time, provided you're not shortening the term you have remaining. So if rates rise in 23 in 2 years, you've got 3 years remaining. You just have to renew for a 3, 4, or 5-year term.
Great. So now, if I'm your client, do I need to be paying attention to that, or is this something that you're communicating with me?
I follow up once a year. So I check in to make sure, on your mortgage anniversary, do you want to make any changes? Have you had a life event? Do we need to revisit anything? If so, let's connect and look at that. So I look at that for my clients, definitely.
I love that. That's fabulous. Because I think that is a concern. A lot of people are like, oh, it's not like, I'm not following the stock market. I have no idea what bond yields are doing right now. I'm going to lose track of whether or not
I only know because of my job. So
okay, well, that's awesome.
But the last piece I'll speak to on the variable is some people will say, well, I don't want my payment to change. I don't like that uncertainty. And I say, yes, but the same groceries every week change price to price. Your hydro bill changes month to month. Your other bills change month to month. Property taxes change annually. Strata fees annually. Insurance, and why not your mortgage payment?
Right.
If you're going to get the benefit of that interest savings. But if you're not going to sleep at night, it's pretty easy to figure out which ones a client's more comfortable with.
Absolutely. Okay, that's awesome. I think this is great. Let's stop it here. You've got so much information. I think it's like fire hose. So let's we can always talk again. Thank you so much for your amazing education. This is really good stuff. I know we're going to do this again because it's really good. And if anybody has any questions for Katy, I'm going to drop again all her information in wherever we are, and feel free to reach out to her. I think she's doing an amazing job of educating everyone on how to position themselves very well and strong, especially in this market. So thanks again, Katy. And let's have a glass of wine soon down at the wine bar.
I'll be there.
All right. Thanks, neighbor.
Thank you.
Let's stop recording.